Welcome to IslamicDonut.com. We are opening up an analysis today on a topic that sits right at the intersection of spiritual compliance and, well, modern global finance.
Really does.
For millions of people, navigating the boundaries of ethical wealth is an everyday reality, and the stakes couldn't be higher.
That's right.
So based on the material we've been looking at, our core mission today is really twofold. First, we have to precisely define what we mean by wealth acquired through prohibited means, which is known as haram.
And then the second part, which is just as crucial, is how you dispose of it.
Exactly. What is that prescribed, non-negotiable method for the purification of that wealth, especially when it comes to, charitable giving?
In this conversation, it goes far deeper than just deciding, which charity to support. We're really examining the foundation of Islamic financial integrity.
The bedrock of it all.
The absolute necessity of purifying one's entire financial portfolio and adhering strictly to Sharia law. Our guidance here is sourced directly from the theological backbone of the faith.
We're talking Quranic versus Hadith.
Key Quranic verses and the authentic traditions of the Prophet Muhammad, the Hadith. And these sources, they don't just offer suggestions. They provide very clear boundaries and protocols for financial rectification.
So for you, the listener, our aim today is to deliver a comprehensive shortcut. We want to move efficiently through the entire process, giving you the scholarly depth to understand not just what the rules are, but really why they exist.
Moving from definition to disposal.
From the abstract idea of corrupted wealth to the practical step-by-step requirements for its physical cleansing. Okay, let's unpack this. Before we can talk about the logistics of removal, we have to establish an ironclad definition. What exactly constitutes haram wealth?
Right. Simply put, haram wealth is any earnings acquired through means that are explicitly prohibited in Islam. It's deemed impure because the way it was acquired violated divine law.
And that violation, it usually stems from something like injustice or exploitation.
Injustice, exploitation, deception, or being involved in activities that just undermine the moral fabric of society.
And the sources we're looking at give very clear categories, which is helpful and moves beyond the abstract.
Precisely. We can break down the most common forms. So the first would involve activities that are forbidden because of their inherent moral or social harm.
Like selling alcohol.
Selling alcohol, income from gambling, which is seen as this zero-sum destructive activity based on chance, not productive labor.
Okay, and then there's the other massive category, which is exploitation in financial dealings. This is where I think a lot of modern complexity comes in.
Absolutely. The second major category is income derived from injustice. This could be theft, fraud, embezzlement, but critically, it includes any dealing with interest, or riba.
Riba. And it's so often just translated as interest, but the prohibition is so much deeper than that.
It is. The philosophy behind it is a rejection of unjustified gain. It's viewed as extracting wealth from others without taking on any real risk, without effort, or without a corresponding exchange of value.
Which leads to economic inequality.
Systemic exploitation. And that distinction you made, Reba, as exploitation, not just a fee, that's a really crucial piece of knowledge. It elevates the whole understanding. It's not just about a percentage rate, it's about economic justice.
And this connects directly to the core religious imperative, right?
It does. The central focus for a Muslim in their economic life has to be this continuous, conscious effort to seek halal, lawful, blessed sustenance.
So the source of your income isn't a minor detail.
It's fundamental. It's fundamental to your faith and to the acceptance of your deeds. The source material really emphasizes this by reminding us of the teaching of the Prophet Muhammad, peace be upon him, who said, Allah is pure and accepts only that which is pure.
That one statement carries so much weight. It means the cleanliness of the money itself is a precondition for the spiritual acceptance of anything you do with that money.
It sets the bar immediately high. The spiritual validity of your entire financial life, your spending, saving, giving it all, depends on the lawful, just nature of your income stream.
So if the source is corrupted, the wealth itself is compromised.
And critically, the spiritual merit you might hope to get from its use is also compromised. The money lacks barakah.
Let's delve into that concept of barakah blessing. Because if I earn $1 million through a fraudulent scheme, it's still physically $1 million. Why does Islamic law insist that it lacks barakah?
That's a great question. Barakah is a spiritual abundance, a prosperity that goes way beyond the numerical value. Wealth earned through haram means is, by its very nature, unstable and spiritually destructive.
Yeah, okay.
It might exist physically, but it won't bring true peace or fulfillment or any lasting benefit to the earner or their family.
Yeah.
It's prone to swift loss, moral corruption, or just failing to provide the stability that halal wealth ensures.
So the lack of barakah is the spiritual consequence of violating that ethical framework.
Exactly, and this connects perfectly to the Quranic guidance on spending, particularly in Surah Al-Baqarah. The directive there is just so profound, especially about what we choose to give in charity.
Right, the command is to ensure earnings are lawful and just.
Yes, but the refinement comes in the standard applied to what we offer. Allah commands believers in Surah Al-Baqarah to spend from the good things which you have earned. The principle is that any offering to the Creator has to be of the highest quality, the very best, purest part of what you own.
And the verse immediately follows up with that powerful instruction about what not to spend. And do not aim toward the defective therefrom, spending from that while you would not take it yourself except with closed eyes.
And that imagery is so deliberate. It's designed to resonate with our human nature. It presents the ultimate measure of sincerity.
I mean, think about it. If someone offered you a ragged, useless item,
Right, you might take it out of pity, but you wouldn't desire it. You'd take it with closed eyes, meaning you tolerate the defect but never prefer it. The verse demands we apply that same quality control to our giving.
so if we wouldn't accept something defective for ourselves, we absolutely should not be offering that defect to God, and haram money is the ultimate defective offering.
Precisely. Because it was acquired unjustly, its source is corrupt. It's the spiritual equivalent of a tainted or even poisonous ingredient. Offering it for charity, assuming it will earn a reward, is a total contradiction,
You're trying to use the corrupt for purification.
which is impossible. The act of charity itself demands integrity, and that integrity starts with the money itself.
Oh.
So now that we've established that, this raises a really crucial question. It's one that often confuses people. If you have haram money, and it's going to the poor anyway, why can't you just use it to fulfill mandatory Sharia obligations?
You mean things like zakat, the annual obligatory charity, or kafara payments for, say, a broken oath?
Exactly.
It seems efficient, right? On the surface, it looks like a legal loophole. You get rid of the bad money and satisfy your religious duty at the same time. But the theological barrier here is absolute. Why is that?
It's disallowed because of the very nature of those obligations. Zakat and kafara are not just taxes or fees. They are fundamentally acts of worship, or ibadah.
Okay, that's the key. They're acts of worship.
Yes. They're designed not just to redistribute wealth, but specifically to purify the wealth and, more importantly, the soul of the person giving it.
So using impure earnings for an act that is explicitly designed for purification, it just creates this fundamental contradiction within the act of worship itself.
That's it, exactly. It contradicts the very essence of purification. You cannot achieve spiritual cleanliness using spiritually unclean materials.
So the sources are unequivocal. Paying your obligatory duties with haram money is invalid.
Completely invalid. The obligation is not fulfilled, and the spiritual burden just stays on your account.
And this is strongly backed up by prophetic teachings, right? The idea that Allah does not accept zakat from haram sources. It's a very stern reminder.
It's a profound warning. That specific hadith serves as a stern reminder that the purity of your income is a prerequisite for the spiritual acceptance of any of your deeds. It moves the discussion beyond just legal compliance and squarely into theology.
So if your income source is tainted, the zakat you pay from it has no spiritual validity, which means you still owe zakat from your halal earnings.
And the original haram funds are still a burden you have to deal with.
Okay, so if you can't fulfill these major obligations with haram money, that forces a huge conceptual shift. The purpose of getting rid of it can't be to gain spiritual reward.
That is the absolute key pivot for you, the listener, to grasp. The goal when dealing with haram money is purely cleansing and restitution. That's it. The money has to be removed from your possession because it was never rightfully yours to begin with.
So the rule dictates that haram money can't be used for your benefit, your family, or for paying off debts. And it can't be given as zakat with the expectation of getting a spiritual reward. We're moving from the idea of merit to the idea of duty.
Precisely. You're fulfilling a duty of purification, not performing an act of merit or tzedakah. You are simply getting rid of a prohibited burden to make sure your remaining rightfully earned holdings are clean.
So the disposition has to be for public benefit. And you're doing it to remove a burden, not as voluntary charity to rack up good deeds.
The intention is transactional removing the impurity, rather than spiritual gaining heavenly reward.
Could you elaborate on that distinction between zakat and sadaqah in this specific context? If I give haram money to a soup kitchen, is that sadaqah or just disposal?
In this specific case, it is solely disposal. Sadaqah is a voluntary act of giving that's intended to earn a reward in the afterlife. It requires a pure intention and, crucially, a pure source of funding.
Okay.
When you dispose of haram money, you're giving it away out of necessity. It's a legal requirement to cleanse your account. And since the source is impure, it cannot generate spiritual merit. The funds go to the needy, yes, but the primary beneficiary of the act is the giver, who is relieved of the burden.
So the money does good, but it doesn't count as sadaqah for the person getting rid of it.
That's right. It clarifies that theological nuance perfectly. It transforms the act from what might feel like a loving gift into a required correction.
Here's where it gets really interesting, moving into the practical application. Because life rarely presents these issues in neat little boxes, does it?
Not at all. People run into complex, mixed situations, so the guidance has to be granular.
So let's look at 3 practical scenarios that the source material outlines, focusing on the immediate action required for each one.
These are critical because they move the theory into real-world, mandated behavior. And the central theme across all of them is immediate separation and cessation.
Okay, scenario 1, earnings from prohibited businesses. Someone has derived income from activities that are explicitly forbidden. Maybe they didn't know it first or had a change of heart. What's the first non-negotiable step?
Absolute cessation. You have to stop the prohibited activity immediately. Continuing is just compounding the transgression.
And once you've stopped,
Then the focus shifts to the accumulated wealth. Since that wealth isn't considered rightful earnings, the entirety of that income, not just the profit, but the total accumulation from the prohibited mechanism, must be disposed of.
by giving it away without the intention of seeking reward.
Exactly. It's
Yeah.
complete erasure of the transaction from a spiritual point of view.
What if the business was mixed? Like a grocery store that sells 95% halal goods, but also 5% alcohol?
That brings up the principle of proportionate disposal. In that case, you have to calculate the exact proportion of your income that came from the haram element, the alcohol sales.
And you dispose of only that specific portion.
Correct. The 95% from the halal sales remains pure and blessed. But this requires meticulous accounting to ensure that purity.
Okay, scenario 2. Interest or riba accumulation. This is probably the most common issue for Muslims living in conventional financial systems.
Without a doubt. It comes from bank savings accounts, unauthorized investments, all sorts of places.
So what's the rule for money gained from interest?
Under no circumstances can it be used for personal benefit. This wealth is seen as an unjustified gain. So the primary purification rule applies. Donate it immediately without the intention of merit.
And the sources add a critical provision here that the disposal method must not perpetuate the sin. That's a vital subtlety.
So important.
Can you explain that in more detail? How could the disposal perpetuate the sin?
Well, think about it. If you take your interest money and you donate it to, say, a bank that facilitates riba, or to an organization that lobbies for predatory lending,
You're strengthening the very system that produced the impurity.
you're feeding the beast. The Purification Act requires an ethical destination. It has to be directed toward public good infrastructure, essential services, poverty alleviation, in a way that is completely disconnected from the initial sinful activity. The destination matters almost as much as the disposal itself.
Okay. And scenario 3, inheritance, a situation that's often completely outside of your control. You inherit a portfolio and find a portion of it is from haram earnings.
The crucial first step for the heir is legal and spiritual separation. You are obligated to do your due diligence and separate the lawful halal assets from the unlawful portion.
And the haram part, once you've identified it.
It has to be disposed of following the rules we've discussed. Donated for public benefit, no reward sought. This is crucial because if you fail to separate it, you contaminate the entire inheritance, jeopardizing the barakah of everything you intend to keep.
That brings us to a very common dilemma. I don't know exactly how much of my money is haram. The funds have been mixed for years, maybe interest accumulating alongside a salary, and the exact percentage is uncertain. What do you do?
This is a sophisticated problem, and it requires a specific precautionary measure. This is where we introduce the concept of khums in this particular context.
Comes literally 1/5, defined here as a mandated 20% of the total wealth that is mixed with haram. It's a mechanism for dealing with that doubt.
Exactly. When you're faced with truly mixed, inseparable funds, where you reasonably suspect contamination but the exact amount is unknown, the prescribed action is a protective overcorrection. You calculate and give comes 20% of the entire mixed amount to charity for public benefit.
20% sounds like a lot. Why such a high percentage?
It embodies the principle of what you could call a precautionary mandated overcorrection. Islamic law prioritizes the certainty of purity over the potential hardship of that amount. Imagine you suspect a small leak in a container of water, but you don't know the size.
You drain a generous portion just to be sure.
You drain a generous portion, that 20% which provides a buffer. It gives you a high degree of assurance that the entire haram component, whatever its actual size, is definitely included in the portion you disposed of.
So by giving away this 20% chunk, you're applying a blanket purification that's designed to ensure the remaining 80% is free from any doubt.
It restores the halal status of your remaining assets by neutralizing the risk of contamination. It's the cost of restoring your spiritual integrity, and it demonstrates sincerity.
So moving from these scenarios to concrete action, let's detail the 4 defined stages for cleansing haram wealth. This gives the listener a clear, sequential roadmap.
Yes, these 4 stages consolidate everything we've talked about, from identification to final disposition, making the whole duty clear and actionable.
Stage 1 is the foundation. Understanding forbidden earnings. This is the recognition phase.
Absolutely. It starts with recognizing all potential sources: riba, gambling, exploitation, and those more modern equivalents like deceptive crypto schemes, pump and dumps.
You have to stay aware.
The necessity is continuous avoidance. You have to consciously steer clear of these sources to ensure your wealth remains blessed. The moment you realize a source is compromised, you move to stage 2.
And stage 2 is the immediate response. Restricting personal use. This requires instant separation.
This is where financial discipline becomes paramount. Islamic law strictly prohibits spending haram earnings on yourself, your family, or any personal needs. Not even essentials like food or housing.
Because consuming that wealth is like consuming impurity.
It carries no barakah and can have negative spiritual consequences for the whole family.
But how do you practically apply that? If the money is mixed in a bank account, how do I restrict its use?
The critical practical requirement is immediate quarantine. The moment you identify or even suspect the haram nature of a portion of your wealth, that specific amount, or the estimated kums amount, must be separated.
You physically move it.
Move it to a holding account, or physically separate it so it can't be inadvertently used for personal spending. This immediate separation prevents the contagion, so to speak, from spreading to the rest of your legitimately earned wealth.
Financial hygiene requires immediate quarantine of impure funds. I like that. So once it's quarantined, we move to the objective, stage 3, disposal.
Stage 3 is the execution of the duty, disposal via public benefit. And we have to reconfirm the core prohibition here because this is where people often make a mistake.
Reconfirming it, you cannot use these quarantined funds for your sacred obligations like zakat or kafara.
That's right, because Allah only accepts what is pure. Instead, the money must be disposed of by giving it to a legitimate charity for public benefit.
Again, not charity for reward.
It is fulfilling the non-optional duty of cleansing your wealth. The funds have to be allocated in a way that provides no direct benefit or spiritual merit back to you.
So we're talking about projects like building public facilities, funding disaster relief, supporting initiatives that benefit everyone.
Exactly. The key is that it benefits the public domain and doesn't contribute to your personal or spiritual advancement. This disposal is an active removal of a prohibited burden.
And finally, stage 4. Completing the purification. What is the full outcome of following through on these stages?
The process culminates in the completion of the purification. This is achieved when you transfer those quarantine funds. That moment marks the successful removal of the prohibited burden from your financial and spiritual account.
And this is the crucial outcome.
It restores the halal status and the barakah of your remaining lawfully earned assets. The entire rigorous process serves to bring your financial slate back to certainty and purity.
What's fascinating here is the sheer speed at which these ancient foundational principles now have to be applied to the newest forms of wealth cryptocurrency.
The principles of halal and haram are eternal. They're based on divine command. But the vehicles of wealth are evolving at warp speed, creating these incredibly complex dilemmas for jurisprudence.
You have to apply the same rules, justice, no exploitation, transparency to this new technology.
Well, that's the challenge.
So let's start with the base question everyone asks. Is crypto halal?
The general scholarly consensus today is that the technology itself, the decentralized ledger, the idea of a digital store of value, can be halal. However, that permissibility comes with extremely strict conditions.
And those conditions are the same filters you'd use for conventional finance. You're looking for riba, garar, and haram activities.
Correct. The digital asset and its transactions have to be completely free from riba, so no embedded interest through staking or decentralized lending. They must be free from haram activities, like linking a token to gambling. And critically, they must be free from excessive uncertainty, or garar.
Let's define garar in this digital context because that's a major hurdle for a lot of crypto investments.
Garar refers to ambiguity, excessive risk, or speculation where the actual substance or value of the thing is dangerously unknown. In crypto, this applies heavily to assets with no real utility, no white paper, no clear team, the extreme volatility of meme coins, for example.
Or participation in a pump and dumps scheme.
Absolutely. A pump and dump is a perfect example. It's built on deception to manipulate the price, so it falls under both garar for extreme uncertainty and financial exploitation because the late investors are deliberately victimized.
The earnings from that are definitively haram.
Without question. It violates the core mandate of transparency and justice. And to manage this complexity, institutions have to rely heavily on scholarly guidance.
Which is why the source material stresses the practice of having Sharia-compliant digital currencies reviewed by specialized Islamic scholars. It's a necessary layer of theological due diligence.
It's essential. The tech evolves so fast that scholars have to constantly assess new protocols to ensure they adhere to those ancient principles.
Okay, let's pivot to the issue of unintended acquisition of haram crypto. Given the speed and the blurring lines, it seems entirely possible to stumble into this without realizing it immediately.
It's a frequent modern challenge. You might invest in what looks like a legitimate platform, only to discover later that its protocols include riba-based mechanisms.
Or get caught up in what seems like a standard token launch, but it was just a speculative bubble.
Exactly. And once that recognition occurs, the moment you realize a portion of your digital wealth is tainted, the purification process has to kick in, just like with conventional money.
The duty begins at the moment of recognition.
Precisely. The mechanism is identical. The haram portion, or the khums amount, if it's mixed, must be immediately separated from your personal digital assets and disposed of appropriately. The moral duty is constant, regardless of the medium of the wealth.
This brings us to a huge logistical challenge in the digital age: restitution. In the physical world, if I fraudulently took $100 from John Doe, the primary objective is to return that $100 to John Doe.
That is always the highest form of rectification. Returning the funds to the rightful owner, it restores justice directly.
But the digital environment presents a massive technical hurdle to that.
It absolutely does. The source material highlights this. The high velocity and often pseudonymous nature of crypto transactions often just obscures the trail of assets.
So even though transactions are on the blockchain, the real identity of the victims is often protected or impossible to find.
Right. Unlike a bank transfer with clear KYC records, the pseudonymous nature of many blockchains makes identifying the original owner frequently impossible.
And that technological constraint forces an alternative.
It does. When the ideal solution, direct restitution, is technically unachievable, the alternative strategies in purification law have to be implemented.
Which means?
It means charitable disposal for public benefit, without the intention of spiritual reward, becomes the necessary path. This is an accepted workaround when the ideal is impossible, showing how Islamic jurisprudence can adapt to new realities while maintaining its core principles. So, to summarize the overarching takeaway from all of this, adherence to Sharia principles in your financial dealings is not a suggestion. It's a critical foundational part of faith. The disposal of haram wealth is not an optional act for extra reward. It's a compulsory duty to maintain purity and integrity.
And for you, the listener, by strictly adhering to these 4 stages, understanding the source, restricting personal use, disposing for public benefit, and completing that cleansing, you ensure not only the purity and barakah of your own wealth, but also that your charitable actions are accepted and pleasing.
That's right. The rigorous attention to the source of your income just underscores that your economic life and your spiritual life are completely inseparable in Islam.
We have to continue to support each other in seeking halal sustenance, no matter how complex the financial world becomes. As we look to the future, considering this relentless evolution of global finance, decentralized assets, complex investment vehicles, the critical challenge remains. How will Islamic jurisprudence continue to innovate in identifying and clearly separating haram from halal? That ongoing scholarly diligence is what will ensure financial integrity remains achievable for Muslims navigating this modern world. Visit www.islamicdonut.com.